The recent banking crisis has many of us wondering who and what is covered under FDIC insurance. If you think it's as cut as dry as being covered under the $250,000 limit, you're going to want to keep watching because who and what is covered is a lot more than you might think. Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in this video, we're covering FDIC limits, credit unions and their coverage, as well as coverage for IRAs, trusts, and brokerage accounts.
Yeah, all in all, this video will be your go-to source for coverage on most of your assets today.
Absolutely.
So make sure you stay tuned to the end, and we're going to provide you a link to the FDIC's electronic deposit insurance estimator called the EDI tool, as well as the credit union's NCUA's share insurance estimator tool, so you can calculate your insurance coverage and determine whether your deposits are fully insured.
Which is really important to know, especially in these troubling times with these banks and what's going on. All right, so Brian, let's start with FDIC insurance and what it covers.
Okay. The Federal Deposit Insurance Corporation, FDIC, is an independent U.S. government agency that insures deposits at FDIC-insured banks and saving institutions. Mm-hmm. The FDIC provides deposit insurance coverage for up to $250,000 per depositor, per insured bank, for each account ownership category. The insurance limit applies to each depositor, not each account. This means if you have multiple accounts at the same bank or credit union, the total amount of insurance coverage is still $250,000. For example, let's say you have a checking account with a balance of $100,000 and a savings account with a balance of $200,000 at the same bank. Mm-hmm. You would be insured for a total of $250,000, not the $300,000 that you have in the combined two accounts.
A very good reason not to keep over $250,000 in one bank, right?
Or in one type of account. Yes.
Exactly. So speaking of which, what types of accounts does the FDIC insurance cover?
Great question. FDIC insurance covers all types of deposits, including checking accounts, savings account, money market deposit accounts, and certificates of deposits or CDs. FDIC insurance does not cover investments such as stocks, bonds, mutual funds, or annuities. The $250,000 insurance limit is the same for all FDIC insured banks as of today. I got to put that disclaimer out there.
There you go. What about credit unions? Are they covered by FDIC insurance?
No. Credit unions are insured by the National Credit Union Association or Administration, which is NCUA, which provides similar insurance coverage for deposits.
Okay.
The NCUA insurance limit is also $250,000 per depositor per insured credit union for each account ownership category.
Okay, so is NCUA backed by the full faith and credit of the U.S. government like FDIC insurance?
Yes, it is. The NCUA is backed by the full faith and credit of the U.S. government, just like the FDIC.
Okay.
The NCUA is an independent agency of the federal government that was created by Congress to regulate and insure credit unions. Basically the same thing as the FDIC, but for credit unions. The NCUA is responsible for chartering and regulating federal credit unions and insuring deposits at federally insured credit unions through what's called the National Credit Union Share Insurance Fund. NCUSIF is the initials for that. Like the FDIC's Deposit Insurance Fund, which is DIF, the NCUSIF is backed by the full faith and credit of the U.S. government. Okay. This means that in an unlikely event that the NCUSIF is unable to cover losses at an insured credit union, the U.S. government will provide the necessary funds to ensure that depositors are fully reimbursed for their insured deposits.
It's so interesting to me that we don't hear a lot about the NCUA?
NCUA, yeah.
But it's around and it
has been. It has
interesting.
been.
So interesting to me. All right. So I want to switch gears here and talk about protection if your brokerage firm fails. Now, you mentioned stocks and bonds and things like that are not covered, but your brokerage firm, is that insured?
Yeah, it's called, it's covered by what's called the Securities Investor Protection Corporation, SIPC.
Okay.
This is a nonprofit corporation that was created by Congress to protect investors if their brokerage firm fails. It provides insurance coverage for cash and securities held by customers at member broker-dealers up to certain limits. SIPC is not backed by the full faith and credit of the U.S. government, unlike the FDIC and NCUA.
Okay.
However, SIPC is authorized by Congress and is subject to oversight by the Securities and Exchange Commission, the SEC. SIPC provides insurance coverage of up to $500,000 per customer, including up to $250,000 in cash. That's just like the FDIC, right? This coverage applies to each separate account that a customer holds at a member broker-dealer.
Okay, so but it's not the same as the FDIC and the NCUA because it's not backed by the full faith of the United States government.
Exactly.
Okay.
It's not the same. SIPC only provides insurance for cash and securities held by customers at the member broker-dealers, while FDIC and NCUA provide insurance for deposits held at insured banks and credit unions. Okay. And additionally, remember this, SIPC coverage does not protect against losses due to market fluctuations or investment fraud.
Okay.
And SIPC is not backed by the full faith and credit of the U.S. government, but provides insurance coverage for cash and securities held by customers at member broker-dealers up to them certain limits.
Okay. So question about IRAs.
Mm-hmm.
Does FDIC and the National Credit Union Administration also cover IRA assets? And is it another $250,000 of coverage? What does that look like?
Yeah, that's a great question because this is one of the questions we were asked on our comment section below some of our videos recently. Yes, NCUA and FDIC provide deposit insurance coverage for individual retirement accounts, IRAs, up to the same limits as other deposit accounts. This means that the current insurance limit of $250,000 per depositor per insured bank or credit union for each account ownership category applies to IRAs as well.
Brian, can I stop you real quick? I have one quick question. Is this for non-annuity IRAs? Because if it's annuity, it's a whole different thing.
Yes. Today, we're not speaking about annuities in this.
So
FDIC
this would be, for example, if I went to my bank and I opened up an IRA there.
Yeah. Let's say you had an IRA CD or an IRA high yield savings account.
Sure. Okay.
Okay. Yeah. Not an annuity. So good. Great question. Mm-hmm. Okay. So let's say at my credit union, I have one IRA with $250,000 in it, a checking account with $250,000, and a savings account with $250,000.
Okay.
What's covered? So here's the answer. If you have one IRA with $250,000 in it, one checking account for $250,000 and one savings account for $250,000, your total deposits are going to be $750,000, right? Under the current FDIC and NCUA insurance limits, each account ownership is insured for $250,000 per depositor per insured bank or credit union. Assuming that your credit union is insured by the NCUA. You're going to hear me say this multiple times. And when we give you these tools later, you're going to be able to see if your bank or your credit union is insured. Okay, you have to know that also. Your deposits at the credit union would be insured as follows. IRA account would be insured up to $250,000.
Sure.
Because it's under the IRA ownership category.
Okay.
Your checking account would be insured up to $250,000 under the single ownership category. Okay. A single meaning me personally having a checking account. Sure. It's that simple. And my savings account would be insured up to $250,000 also under the single ownership category.
Okay.
In total, you got $750,000 in deposits, but only $500,000 would be fully insured by the NCUA. And here's why. The checking and savings account are both under the single ownership category.
Right.
Okay. So you have to know what the ownership categories are at your institution.
So in this example, then the remaining $250,000 in deposits would be uninsured and not covered.
Yes, it would not be covered by the NCUA in the event of that credit union's failure.
Okay, so is that the same coverage if I have the same assets at a small regional bank?
Yeah, if you have the same assets at a small regional bank that's insured by the FDIC, your deposits would be insured in the same way as they would at the credit union insured by the NCUA. Okay. The FDIC and NCUA insurance limits are the same for all insured banks and credit unions regardless of the size or location. So, however, if you have accounts at multiple insured banks or credit unions, you may be able to increase your insurance coverage by opening accounts in different ownership categories at the different institutions.
Okay.
Important to note that if you have accounts at multiple insured banks or credit unions, you may be able to increase your coverage.
Okay. So we talked a little bit about in these ownership categories. You mentioned single accounts.
Yes.
And we talked a little bit about IRAs, but let's go through them.
Okay. Here's some different ownership categories. Okay. Single accounts, which are owned by one single person. Joint accounts, which are owned by two or more people.
Okay.
IRAs, which are still owned by one person. Trust accounts, which are owned by one person or maybe even two people, but it is designed for the benefit of others. Okay. We'll talk about that more in a few minutes, but also certain retirement accounts such as self-directed 401k plans, which are owned by one person.
All right. So let's say that I have the following at a local bank.
Okay.
I have an IRA for $250,000. I have a checking account for $250,000. I have a savings account for $250,000, and I have a joint account for $250,000 with my husband. How does that? What's covered?
Great question. Okay. Under the current FDIC insurance limits, each category, ownership category, is insured for up to $250,000 per depositor per insured bank.
Right.
In total, you have $1 million in deposits at your bank, but only $750,000 will be fully insured by the FDIC, assuming your bank is insured by the FDIC.
This is because checking and savings are both under the single ownership category, but that joint account with my husband would be separate ownership category.
You're exactly right. Yeah, that is a separate category there.
Okay.
So.
All right. So let's talk about trusts. What are the limits for those and are they different?
Yes. The trust account deposit insurance coverage provided by the FDIC is currently still $250,000 per owner for each unique beneficiary. There's the key. This means that if a trust has multiple beneficiaries, each beneficiary would be eligible for $250,000 in FDIC insurance coverage for their interest inside that trust. Okay. And this trust account insurance coverage is separate from any other deposit accounts that the owner or beneficiary may have at the same institution. This is key. Yeah.
Wow. Who knew? I just thought FDIC insurance was just FDIC insurance.
No.
Wow. All right. So we've given a lot of examples in this video. If you want to figure it out on your own so that you can make sure your assets are covered, because as Brian's been saying, make sure if it's insured. So go check out the FDIC's electronic deposit insurance estimator tool. It can be used by anyone, including individuals, businesses, government entities, to calculate deposit insurance coverage for single accounts, joint accounts, revocable trusts, and certain retirement accounts. And we are going to put that link below this video. Go check that out. And we're also going to be putting a link to a tutorial that Brian did on how to actually use it, especially when you start getting all these multiple accounts. So that will be in the pinned comment and the description.
Yeah, it is a pretty awesome tool. In addition to using Eddie to calculate your insurance coverage, you can also generate reports to save or print for your records.
Yeah.
So these reports can be helpful when opening new accounts, changing account ownership, or filing insurance claims, just in case of an event of a bank failure. So,
right.
And if you bank with a credit union, we're also going to drop the link below to the NCUA's free online share insurance estimator tool, so you can determine the level of share insurance coverage that you also have at credit unions for your deposits.
All right. Woof. There we go. You made it this far in this video. Hit that like button. Show us some love. Share this video with your friends and family because it is important. I think that, for me at least, I'll speak on my behalf. I just assumed, oh, sure, my bank's FDIC insured, or, you need to know. You really do. Don't get caught off guard here. We've seen how fast this bank failure or bank crisis can spiral out of control.
Yes.
Do check out the tutorial that Brian did. It is in the link and the pinned comment below. Link is in the description and pinned comment below, along with those two resources for those estimator tools. All right, Brian, before we wrap this up, anything else you want to add?
You know, this is a lot of us have never seen this type of run on banks before.
Sure.
And just to make sure that you're safe and secure and you know where your assets are, this is the tools that we're providing the links below for can help you get all your affairs in order and know where it's at and have the peace of mind knowing that no matter what happens, you are insured on all your deposits for all your accounts, no matter where they are.
Okay. So there you have it. All right. Thanks, Brian, for all this really valuable information. And thanks to everybody who watched. Again, do not forget to hit that like button and subscribe.
Thanks, everyone. Have a great day.
Bye-bye.